Hello my friend, welcome, स्वागत है. Today we are going to discuss input tax credit and computation of GST liability. So my dear friend, you all know we have started the basics of GST, and input tax credit and computation of GST liability is important aspect in our GST. So in this present question, who is an input service distributor, ISD, under GST? So ISD is a very important topic. So now the answer is an input service distributor is defined in section 2 subsection 61 of Central Goods and Service Tax Act 2017, CGST Act 2017, as an office of the supplier of goods and service or both, which receives tax invoices issued under section 31 towards the recipient of input services and issues a prescribed document for the purpose of distribution of credit of CGST, SGST, IGST, UTGST paid on the said services to a supplier of taxable goods or services or both, having the same permanent account number. Here it is important to note that there should be same permanent account number as that of the said office. The essential condition for qualifying as an input service distributor are as under. The input service distributor should be an office of the supplier. Such supplier can be a supplier of goods or services or both. Such office should receive tax invoices issued in respect of receipt of input service. Tax invoices received in respect of input goods are not eligible for ISD benefit. So very important. So tax invoices received in respect of input goods are not eligible for ISD benefit. Such office should issue a prescribed document for the purpose of distributing credit of CGST, SGST, IGST or UTGST to a supplier of taxable goods or services or both, having same permanent account number as that of the said office. Here we are taking example to clarify this all discussion. Head office, suppose head office of XYZ Limited is located at Bangalore, having branches at Chennai, Mumbai, Kolkata, and head office incurred annual software maintenance expense service received on behalf of all its branches and received at the invoice for the same. Since software is used by all its branches, the input tax credit of entire services cannot be claimed at Bangalore. The same has to be distributed to all the three locations. Here, the head office at Bangalore is the input service distributor. And interesting, very nice. So next question is very important so that we can have a glance over it. Mr. B, Mrs. B has procured a machinery for rupees 50 lakh and paid GST of rupees 9 lakh, 18% CGST. He has capitalized the invoice value and will claim depreciation of the entire invoice value. Please advise on the availability of ITC. So here answer is, if the depreciation is claimed on the ITC component, ITC cannot be availed, and hence Mrs. B will not be eligible to avail ITC on this case. Next question, what are the various types of electronic ledger under GST? So my dear, very important question. Electronic ledger is an electronic form of passbook for GST. These e-ledger are available to all GST registrant on the GST portal. The various types of electronic ledger under GST are as follows. Electronic cash ledger, second electronic credit ledger, and third electronic liability ledger. Next question, that is the 10th one. What is electronic cash ledger? Very important. This is like an e-wallet and is GST payment made in cash or through bank reflects in electronic cash ledger. After deduction of input tax credit, that is ITC, any balance tax liability has to be paid using balance in electronic cash ledger. Here we are taking to clarify all the discussion. Mrs. N has a GST on sale of rupees 40,000. She also has an input tax credit on purchase of 25,000. The balance in his cash ledger is nil. So here we are clarifying that GST on sale, that is rupees 40,000, input tax credit ITC 25,000. So balance GST liability to be paid, that is 40,000 minus 25,000 is 15,000, 15,000. The GST liability of rupees 15,000 has to be paid in the form of cash bank payment. So Mrs. N will deposit rupees 15,000. This will be shown in electronic cash ledger of Mrs. N. The balance of ledger will be utilized for the payment of GST. So now come to the next very important question. What is an electronic cash credit ledger? So in the electronic credit ledger, all credit accrued on account of inward supplies made by a taxpayer within a tax period are accumulated. The ledger is maintained major heads wise, that is IGST, CGST, SGST and GST compensation cess. The electronic cash ledger is maintained by the GST system. The balance of electronic credit ledger cannot be utilized for the payment of interest, penalty or late fee. Interest and penalty can be paid only and only through actual cash payment. A specific order and restriction for utilizing ITC, that is IGST, CGST, SGST for payment of CSD liability. So credit of IGST can be utilized against all any tax liability in this order. First IGST, next CGST, then SGST, UT, GST. Credit of SGST and UTGST cannot be utilized for payment of CGST. Very important. So SGST can be set up in the following order: SGST and UTGST and IGST. Next question, very important. What is an electronic liability ledger? This ledger records all liability of taxable person, including the tax interest, late fee, or any other amount payable per return, per the return furnished by the taxpayer per any proceeding. The tax and interest payable arising out of any mismatch of ITC or output tax liability. Any interest that may accrue from time to time. The reversal of ITC or interest. Taxpayers should settle their liability in the following order: self-assessed tax and other duties or dues such as interest, penalty, fees or any other amount relating to previous tax period return. Self-assessed tax and other dues relating to the current tax return. Any other amount payable under the Act, rule, liability arising out of demand, notice, proceeding, etc. Next, we are coming to the very important question under the head input tax credit computation of GST liability. So here question number 13 is very important. Here is the practical question. So XYZ Limited purchased the machinery on August 12, 2019 for rupees 12 lakh excluding GST. The company put the machinery to use after the purchase and avail input tax credit for the eligible amount. The machinery was sold as a second-hand machinery on May 14, 2020 for rupees 9 lakh. During purchase as well as sale of the machinery, the GST rate applicable was 18%. Assuming that there was no change in legal position, discuss the steps which XYZ Limited is required to take at the time of sale of second-hand machinery. Briefly state the statutory provision involved. So my dear, very important question. So section 18 subsection 6 of the CGST Act 2017 read with rule 40 subsection 2. The CGST Act 2017 provide that if capital goods or plant and machinery on which input tax credit has been taken as supplied outward by the registered person, he must pay an amount that is higher of the following. जो ज्यादा है पेमेंट करना होगा. Input tax credit taken on such goods reduced by 5% per quarter of a year or part thereof from the date of issue of invoice for such goods or tax on transaction value. XYZ is required to take these steps in the light of the above provision for payment of tax at the time of sale of second-hand machinery. The amount payable on the sale of machinery shall be, very important. Now you say input tax credit taken on machinery on 12 lakh at the rate of 18% is equal to 2,16,000 less input tax credit to be reversed at the rate of 5% per quarter for a period of use of machine from August 2019 to May 2020. For the year 1920, there will be 3 quarters. So 2,16,000 into 5% into 3 quarters is equal to 32,400. For the next year 2021, that is 1 quarter. 2,16,000 into 5% into 1 is equal to 10,800. So the total will be 43,200. So amount required to be paid as per above A is 1,72,800. That is 2,16,000 minus 43,200. The leviable on transaction value, that is 9 lakh into 80% as per B above, that is 1,62,000. So amount payable toward the sale of machinery being higher of rupees 1,72,800 minus or 1,62,000, the higher is 1,72,800 will be payable. And interesting. Yes, my dear. Come to the last question. Question number 14. Compute the amount of ITC admissible to XYZ Limited in respect of various inputs purchased during the month of April 2020. So here the first question is goods purchased without invoice 37,000. Second, goods purchased from ABC Limited, full payment is made by XYZ Limited to ABC Limited against such supply, but tax has not been deposited 47,000. Purchase of goods not to be used for business purposes 13,000. Purchase of goods from PQR Limited. Invoice of PQR Limited is received in the month of April 2020, but goods were received in the month of May 2020, 65,000. Goods purchased against valid invoice from Rabbit Limited. Tax has been deposited by Rabbit Limited. XYZ Limited has made payment to Rabbit Limited for such purchase in the month of May is rupees 40,000. Now we are coming to the answer. Very important. Computation of admissible ITC to XYZ Limited for the month of April 2020. So here the first question is goods purchased without invoice. So my dear, here there will be no input tax credit because there is no invoice. Good purchase from ABC Limited, full payment is made by XYZ Limited to ABC Limited against such supply, but tax has not been deposited. Purchase of goods not to be used for business purposes, no ITC. Purchase of goods from PQR Limited. Invoice of PQR Limited is received in the month of April 2020, but goods were received in the month of May 2020. So there is no ITC. There must be invoice. There must be tax must be paid within that time. So these all are the conditions. Goods purchased against valid invoice from Rabbit Limited. Tax has been deposited by Rabbit Limited 40,000. XYZ Limited has made payment to Rabbit Limited for such payment in the month of May 2020. The total admissible ITC available in the month of April 2020 will be 40,000. Thank you for listening. Very interesting.